Okay, folks, welcome. We're going to get started in about a few more seconds. And yes, there are still seats available up front. Grab your cup of joe or your favorite tea or drink of choice. Settle in because we're going to be starting our update in just a few more seconds. Okay, welcome again. Today is June 18th, 2020. I'm not sure what week we are in. I don't know if it's week 10, 11, 12. All the weeks seem to be rolling in, but it's again a beautiful day. Make sure you get out there. Welcome to Preparing for COVID-19 Recovery, Loan Options and Forgiveness Strategies. And we're broadcasting live from New Jersey if you're tuning in from another state. And we are powered by, I wanted just to make mention of this, SACS, which is the Accounting, Tax, and Advisory Service. You see the website there. Our tagline is direction that moves you forward. Also, SACS Wealth Advisors. That's our wealth management practice, investment management, fee-only firm that we work with 401ks, individuals, 403bs, and also a new addition that came in a few months ago, S2 Solutions, an impactful partnership delivering innovative technology. Yes, we want you to know that we are here to support you. We're more than just SACS. We are also SACS, SACSWA, and S2 Solutions here to help. And this is our slide that basically we need to show that we are providing this information as general guidance only. It doesn't constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. So make sure that you speak to your professional advisor so you can kind of share with them what you're trying to do. And of course, we're here to help as well and love to have that discussion with you. So let's talk about CPE. Some of you are on this webinar not only because you love us and you want to find out the updates, but you also want to get that CPE because this is the year, obviously, we're in that cycle. In order to get CPE, folks, just a few things I'm going to mention again every time we meet. First, you have to stay throughout the entire webinar. You can't sign off before it's over. Otherwise, it will not count. And yes, we are tracking you. Second, you need to answer at least 75% of the poll questions. We have 4 poll questions. That would mean 3 of the 4. And last, you need to also fill out and complete the participant evaluation sheet. That lets us know that you really want the CPE. And at the bottom of that sheet is the email address for you to send the participant evaluation to the proper person. And where is that form? Well, if you look at your screen, you should see in the handout section, it's number 5 of the 5 handouts that says participant evaluation sheet. One other thing too, just to mention, we do send out this webinar. We do send it to the folks who are registered and who attend with the slide deck. So you don't need to ask whether or not we're going to send that to you. We will. So that's it for CPE. Which brings us to the very first poll question number 1. Remember, you need to answer at least 3 of the 4 poll questions. And here is the first poll question. Which of our SACS recovery team panelists who are on the call today has a pet named Pancake? Is it Steve Ehrenberg? Is it Josh? Or is it me, Todd? So which one has a pet named Pancake? And you're now opening the polls. So please go through and answer that question if you want CPE. And it looks to me like there is folks voting, but we're still going to keep it open because obviously if we close it too quickly and you really want the CPE and you don't answer, it's not going to count. A little bit longer. Is it Steve, Josh, or Todd? a pet named Pancake? Okay, it's still voting. Get your votes in. And yes, we do have pets. I actually have 2 pets. Josh and Steve and have only 1 pet. Not to give away the answer. Okay, we're still voting a little bit longer. Give you a minute or two, a second or two more so that you get your votes in. All right, and the answer, folks are saying that it is Josh whose pet's name is Pancake. Let's see what the real answer is. Go to the next slide. Okay. So, is it Steve, Josh, or Todd? If you answered Steve, that would be the correct answer. And you can see here are the pictures. Steve's cat, his name is Pancake. I'm not really quite sure why Josh is not with his dog Toby. I think that we said that Toby has an exclusive license and cannot be filmed with anyone else but himself. And there you can see me with my little dog Banksy. We're both wearing the same bow tie. Here's today's agenda. So I just given you the introduction now. We've got some updates on the EIDL loan and the Main Street lending program. We definitely have some new guidance on the loan, PPP loan forgiveness. There's new guidance, there's new application forms. We want to go over and emphasize the FTE rehire exemptions. And also we want to kind of talk to you about a loan forgiveness calendar. Everyone loves calendars. So here's one that you may want to consider, how to track when you should be applying for forgiveness. And of course, at the end, we have our open discussion. So I'm going to kick off the updates and turn this over to Steve, who I don't think he has Pancake with him. But Steve, can you take it away and start the updates?
Yes, thank you, Todd. Good morning, everybody. Hope everyone is doing well. Going to start off, just talk about the EIDL program, Economic Injury Disaster Loan Program, only because on Monday of this week, the SBA reopened the program to all eligible small businesses. Prior to that, they were only accepting applications for agricultural businesses, but these restrictions have since been lifted. Just a couple of reminders here. There's an advance of up to $10,000 that's available through the EIDL as well. And you're not required to be approved for an EIDL in order to receive the advance. But if you do receive the advance, it will be deducted from your total loan eligibility on the EIDL side. And also keep in mind, from a PPP perspective, if you do get the EIDL advance, your loan forgiveness will be impacted. And lastly, the limit now, while the program initially was approved for loans up to $2 million, our understanding is that they're limiting them for now to $150,000. So if this program does interest you, certainly get your application in now via the SBA website. And just as a reminder, what the loan proceeds can be used for, the opportunities to use the funds are broader than that of the PPP, and we list them here. Provide sick leave to employees, maintain payroll, meet increased supply chain demands, make rent or mortgage payments, or repay obligations that cannot be met due to losses of revenue. So as you see, there's more opportunities here to use the funds, but it is a traditional loan program. So borrowers will be required to pay these loans back over a 30-year time span at anywhere from 2.75 to 3.75%, but you can prepay them. So keeping that in mind. On the next slide here, we have the Main Street program. And as we've said on our prior webcast, the launch was imminent, and it indeed get launched this week as well. The Federal Reserve, these are the 3 loan facilities, the new loan, priority loan, and expanded loan, essentially intended to provide financing for small to medium-sized businesses that were in good financial condition before the outbreak to help everyone get through until conditions normalize. And the Fed is recommending that eligible borrowers contact their lending institutions to discuss the next steps. Lenders were allowed to start registering, and not every bank will be participating. So if this is an interest of yours, you definitely want to reach out to your bank and see if they're participating. And if not, talk to your advisor, talk to us, we can point you in the right direction. So we put together this chart just as a, to repeat some of the information, just so that you see what the different facilities offer. Just to go through it quickly, they each have a 5-year maturity with a 2-year deferral of the principal, 1-year interest deferral, at which point the interest is capitalized into the loan. The interest rate is LIBOR based plus 1 or 3 month plus 300 basis points, and there's no penalty for prepaying. So here, these are some of the details. These are the rest. Essentially, you get the 2-year deferral, then you pay 15% at the end of the 3rd and 4th year, and the 5th year you make the balloon payment. We see here the loan size, the minimums and the maximum, anywhere from 250 to 300 million, depending upon which facility you're interested in. And there's also this adjusted EBITDA calculation that you need to calculate in order to determine your maximum loan amount. So again, if that's something you're interested in, take a look at your financials, and if you are indeed eligible, you'll want to apply, because the program is open, but the Fed will stop purchasing these essentially on September 30th, although the program may get lengthened. And just keep in mind too that there are loan and origination fees depending upon which facility you enter into, and some of these fees, while they're charged to the lender, may be passed along to you as the borrower. So keep in mind that on top of the interest, you're going to be paying fees as well. So now I'm going to turn it over to Todd for poll number 2. Todd.
Okay, folks, poll number 2. Where can I find the CPE participant evaluation form to obtain my credit? Is it in the handout section of this webinar dashboard? Is it I should ask my SACS advisor for it? Or no idea? So again, open the polls up, and let's see your results. Start voting starting now. Okay, we did want to emphasize where the CPE participant evaluation form was to obtain credit. I know in the beginning, folks could not find it, but here's the question: where is it? Where can you find the CPE participant evaluation form to obtain credit if you need the credit for this? Allow for a few more seconds for people to vote. And again, if you have problems voting, you just have to hit escape and you should be able to click through. All right. So, okay, folks, very proud of you. 94% of you got it right. In the handout section of the webinars dashboard is indeed where you'll find it. And we will continue now with the webinar. PPP Loan Forgiveness. This is my section, or part of my section I'm going to kick off. So let's talk about some updates. First, the Paycheck Protection Program Flexibility Act of 2020 was signed by President Trump on June 5th, 2020. And here's some things that were included in this act. First, an extension of the loan term from 2 years to 5 years, an expansion of the overall PPP from June 30th, 2020 to December 31st, 2020. But you must receive funding by June 30th, 2020. I know we'll talk a little bit more about this later, but just remember, as of yesterday, there was $129 billion still left for people to take, and you have 12 days left, but you do need to receive that SBA number by June 30th, 2020. There was an extension of the covered period from 8 weeks to the earlier of 24 weeks from the loan origination, or December 31st, 2020, which gives you basically more time to spend the money. But you could, if you definitely don't like change, you can elect for that 8-week covered period. It's still available to you under the act. Also, there was a modification of the the 75%, 25% payroll cost dash non-payroll cost split to 60%, 40% respectively. And it was very clear that there was a clarification that no cliff exists. In other words, it's not that if you spend less than a 60%, none of the loan is forgiven. There was a removal of restrictions on the deferral of employer side Social Security taxes. There was a revision of the deferral period. There was wonderful additional employee rehire exceptions and the application filing deadline. Updates, some new information and updates. Then on June 5th, 2020, SBA interim final rule had some updates, revisions to the first interim final rule, which really included a set of changes to kind of adopt the language of the PPP Flexibility Act of 2020. And then on June 11th, you can see the progression here. We had an SBA interim final rule with additional revisions to the first interim final rule, new eligibility restrictions. So you're ineligible for the PPP loan if, for example, an owner of at least 20% of the applicant is incarcerated, I guess that means you're in prison, on probation or on parole, or presently subject to an indictment, criminal information, arraignment, or other means by which formal criminal charges are brought in any jurisdiction. And also you're ineligible if, for example, an owner of at least 20% of the applicant has been convicted of a felony involving fraud, bribery, embezzlement, or a false statement in a loan application or an application for federal financial assistance within the last 5 years, or convicted of any other felony within the last year. So I guess that's a no crooks provision in the law. Okay, and then recently on June 16th, 2020, we had a new interim final rule, revisions to the third and sixth interim final rules. And it spoke about how at least 60% of the PPP loan proceeds shall be used for payroll cost. Refinance idle included for purposes of determining percentage usage of payroll costs, forgiveness usage. It defines amounts eligible for forgiveness. Then the payroll costs up to $100,000 annualized per employee. So if you're choosing 8 weeks, that's $15,385 is your golden number. If it's 24 weeks, it's $46,154. But it also included that covered benefits for employees, but not owners, including healthcare and expenses, retirement contributions, and state tax imposed on employee payroll paid by the employer. It also spoke about owner compensation replacement. It calculated based upon the 2019 net profit. So for 8 weeks, that would be $15,385. And for 24 weeks, they capped it at $20,833. Also spoke about non-payroll costs, again, reiterating mortgage interest, rent, or utilities incurred prior to February 15th, 2020. And we'll know a little bit later that there is some contradictory information between the interim final rule and loan forgiveness applications. Surprise, surprise. So we had some new forms. Hooray, something new to look at. There's a new form, Form 2483, a borrower application form, some revisions to question 6, and Form 2484, lender application form, revisions to Section 8. So guys, remember, you only have 12 days left before these forms actually become defunct. But then the real exciting news, something that accountants live for, as well as I'm sure you two on the call, new loan forgiveness applications. So there is an easy form finally, somebody came out with something easy related to this. The 3508 Easy Paycheck Protection Program Loan Forgiveness Application, but also, of course, the long form, the Form 3508 Paycheck Protection Program Loan Forgiveness Application. So here's what we're going to do. We're not going to do a show and tell. We're going to do a tell and show. So I'm going to go through these forms first by verbally noting the changes, and then we're going to take a look at both of these forms that are new and, I guess, to a certain degree, improved. So first, we're going to talk about the SBA. They released the 3508 and the Form 3508 Easy. Let's kind of talk about the 3508 Easy first. Borrowers meeting one of the following three criteria are eligible to use the Form 3508 Easy. One, if you're a self-employed individual or any employee, if you're a self-employed individual, an independent contractor, or sole proprietor who has no employees at the time of the PPP loan application, that's one criteria. Or two, did not reduce salaries of any employee's earnings less than $100,000 annualized by more than 25% when compared to the covered period to Q1 2020, and the borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. Note that reductions attributable to the borrower's inability to rehire personnel employed on February 15th, 2020 and refill those positions with similarly qualified employees on or before, notice on or before, December 31st, 2020, as well as situations where job offers to restore hours are rejected, may be ignored, or do not reduce salaries of any employee earnings less than $100,000 annualized by more than 25% when comparing the covered period to Q1 2020 and the borrower was unable to operate during the covered period at the same level of business activity as before February 15th, 2020, due to compliance with certain governmental standards related to the COVID-19 pandemic. For example, sanitation, social distancing, customer safety, etc., etc., etc. And borrowers who do not meet this criteria would use Form 3508. So just a note for the folks who are considering the easy, size does not matter. Haha. So you can have a large loan and still follow the easy if you meet the criteria. So updated and revised guidance includes 60-40 payroll costs / payroll, non-payroll cost split, 24-week covered period, annualized employee but non-employer compensation at a rate of 24/52 or that 46,154 per individual. There's also, again, in the form, limit owner compensation to 2.5 months worth of 2019 profit, up to $20,833 per individual. And we have some kind of discussion points on that. Note that the $100,000 annualized salary limit still applies, and no changes for borrowers selecting the 8-week covered period. For non-cash benefits, employer health insurance contributions made on behalf of self-employed individuals, general partners, or owner employees of S corporations are ineligible for forgiveness. It's in there, and the query is, are health insurance coverage contributions made on behalf of C corporations, owner employees eligible for forgiveness? Also, employer retirement contributions made on behalf of self-employed individuals or general partners are ineligible for forgiveness. Query, are retirement contributions made on behalf of S corporation and or C corporation owner employees eligible for forgiveness. Also, you'll see on the application form, again, the covered period versus the alternative covered period and paid or incurred, kind of what we saw before. Forgiveness, talking about the additional FTE information. Oh my goodness, FTE reductions and exceptions spelled out on this application. So on the form 3508, applicants enter the total FTEs as of the earlier of the application date or December 31st, 2020. Hey, the question you guys keep on raising, we've raised too. Is it 8 weeks or is it 24 weeks? The answer is found, I believe, here, although we need further guidance. We'll talk about that a little bit further. Representations and certifications, form 3508. Applicants can check a box to indicate that they were unable to return to pre-February 15th, 2020 levels of activity due to compliance with the requirements and guidance issued between March 1st, 2020 and December 31st, 2020 by the governmental agencies referenced above related to the maintenance of standards of sanitation, social distancing, or any other work or customer safety requirement related to COVID-19. I checked the box. Representations to certifications, we're talking about Form 3508EZ. Applicants must check a box indicating that their eligibility requirement for number 2 or number 3 as detailed earlier. And note the guidance here appears contradictory as the instructions indicate that the applicants need to only meet one of the 3 criteria detailed earlier, and there's actually only 2 on the form. Okay, so at this point in time, I think we're going to take a look at the forms. We're going to take a quick look at the forms. I told you, now I'm going to show you. This is tell and show instead of show and tell. Here is the 3508EZ form. You can see it looks kind of like the form before. Keep on scrolling down. The difference that you're going to see here as you scroll down is when you get to the line that shows, I believe, as you continue to scroll down, line number 7, you see the payroll cost is 60% requirement as opposed to the 75% requirement. Still, you see there's no reduction related to FTEs or salary reduction on this. That's why it's a easy form. And again, size does not matter. You keep on going down, and now here is the section that is very familiar. These questions somewhat have changed. We're going to see this on the long form, but as we scroll down, what's unique about the EZ form, you can see as we go down towards the end, you need to indicate at least one of the following 2 items. One relates to the fact that you didn't reduce the number of employees paid or the average paid hours of employees between the periods that we talked about, or that you couldn't actually work because you're under the COVID restrictions. And that's where we're pointing out that this is not consistent with the application, because the application also allows you to use this if you're self-employed or a subcontractor, et cetera. So you need to check one of these boxes in order to use the form. And if you don't check the box, well then, sorry, you gotta use the long form. So now let's go to the long form. I did the highlights. You're not going to find the highlights on the form, which is actually in your handouts, both forms and also the instructions. You notice the expiration date still says October 31st, 2020. Don't know why, especially since they extended this to December 31st, 2020. Again, looks fairly the same as you're going down, as you're scrolling down. You'll see that, again, you do have the FTE and the salary and hourly wage reduction lines. As you're going down, I highlighted that the payroll cost now is not 75%, it's 60%. As you go through, continuing to scroll. All right, just so you see here, I highlighted some changes. It talks about one of the things that you're certifying is that the payroll costs equal to at least 60% of the forgiveness amount, and also if a 24-week covered period applies, it doesn't exceed the 2.5 months worth of the 2019 compensation for any owner, employee, or self-employed individual. General partner is capped at $20,833 per individual. Continuing to go down, this is very similar to what is there before, but you can see there is something new here. The last one says, if the borrower has checked the box for FTE reduction safe harbor 1 on the PPP Schedule A, the borrower was unable to operate between the February 15th, 2020 period and the end of the covered period at the same level of business activity as before February 15th, 2020, due to compliance with requirements established for guidance. Again, it's the same wording that you weren't able to bring everyone up to speed because, hey, you can't bring people back due to the regulations that are being put out there. Continue to go through this slide. You'll see that the Schedule A really hasn't changed much, but there is something as you're going through that I just want to highlight. You can see the full-time equivalency that we're going to get into, the reduction. Basically, it says you have to satisfy at least any one of the 3 criterias in order to be able to enter one. And one is that there's no reduction in employees or average paid hours. That's 1. Number 2, under the safe harbor, you're unable to operate, which we talked about. And then the next one, if you satisfy the FTE reduction safety harbor 2, you can check the box. So interesting enough, as we go to the worksheet, which I just want to point something out here as we're going through. This is going to become, I think, a discussion point. Continue to go through and stop right there. Step number 4. So this is the FTE reduction safe harbor. So when you're doing this, it says enter the borrower's total FTE as of the earlier of December 31st, 2020, and the date this application is submitted. Do you notice that, folks? The date this application is submitted. So when we talk about when the application can be submitted, that is when you're going to put down the total FTEs, either the earlier of the date you submit the application or December 31st, 2020. So the question, is it 8 weeks or is it 24 weeks? I think has an answer, but we're going to talk a little bit more about that, I believe, in the open discussion. Going through again, as we scroll through the remaining portion of this, not a whole lot has changed. This is the additional form. So that's the 2 splendid applications. So we're going to return back to our slide deck at this present time. And I believe the next slide is another poll question. So poll question number 3. Get ready to start your polls. Sachs Wealth Advisors, what we fondly call SACSWA, manages approximately how much in assets for clients? So this is part of our group here, SACSWA. Is it 250 million of assets under management, 750 million of assets under management, or over $1 billion of assets under management? The polls are now open, so cast your votes if you want your CPE, SACSWA Wealth Advisors, Sachs Wealth Advisors. How much do we manage of assets under AUM, assets under management? This includes individuals, this includes 401ks, 403bs, the whole kit and caboodle. Tell us as you're voting. You'll leave it open a little bit longer for your vote. You can guess on this if you like. How much do we manage of assets under management for Sachs Wealth Advisors? A little bit longer before we close the polls. You have a few more seconds if you want to get your CPE, or if you just like to guess at questions. There are some of you out there too, I've found is true. Okay, so those of you who answered over $1 billion, 61%, you were right. I think it's actually $1.1 billion of assets under management that we manage under Sachs Wealth Advisors. Okay, at this point in time, I think I get to stop talking and I'm going to turn this over to Steve, right? Steve?
That's right. Thank you, Todd. Thanks for the recap. That was great. So we're going to go over, again, some of these full-time equivalent employee exceptions. There's a lot of information that's been going back and forth, so we thought it would be a good reminder or a good area to just kind of accumulate all this data. So from an FTE perspective, we listed here all the different type of headcount information you actually are going to need, irrespective really of which form, because you have to know if you had a reduction in the first place. But you're going to need your FTEs from either February 15, 2019 to June 30th, 2019, or January 1, 2020 to February 29, 2020, or if you're a seasonal employer, you even have another option here for that 12-week period listed on the slide. You'll need to know your FTEs during the 8-week or 24-week covered period. You need to know your employees as of February 15, 2020. That's a new question just because you have to know whether or not you return to your same level of activity, potentially, if you're going to look for one of these rehire exceptions. You'll see here that we crossed out the FTEs as of June 30th, 2020, the June 30, 2020 date, which was prevalent prior to the Flexibility Act that was passed 2 weeks ago, is now not a relevant date. So the June 30th date, irrespective of when you apply, is no longer a relevant date. But you do need to know your FTEs as of the application date, as well as now as of December 31st, 2020. So that's a lot of information to gather. And you're saying, well, what's an FTE and how do I calculate that? Well, don't worry. We're going to cover that on a slide in a moment. But just wanted to list some of the other information you'll need salary and benefit wise here. Annualized salary, cash and non-cash benefits, owner comp. It is limited, but you still will need to have that. And depending upon the type of entity you are, as Todd mentioned, there are different types of restrictions. So that's something you want to keep in mind. And lastly, just the number of hours worked per week so you can do your FTE calculation. So the next slide also discusses just some other information. If you did have a reduction, well, what can I do to avoid the negative forgiveness implications associated with? Well, if you had any of these factors listed here in terms of previously terminated employees who declined rehire opportunities, employees who were fired for cause or voluntarily resigned, or employees who voluntarily requested and received a reduction in hours, if you document this correctly, your forgiveness should not be negatively impacted. So this is definitely something you're going to want to keep in mind as well. And lastly, the Flexibility Expansion Act brought about some additional FTE rehire exceptions for those businesses, and Todd has mentioned this before, so I won't go through it again, but if you meet this criteria that's listed on the slide in terms of inability to rehire employees who were employed as of February 15th by the end of the year, or are unable to return to pre-COVID-19 business operations due to the restrictions listed here, then you also will have an ability to avoid any negative forgiveness implications. So it seems what they're doing here is trying to make the borrowers that receive the PPP loans and deserve them, you should be eligible, you should be able to get forgiveness. So hopefully you can. We understand there's obviously situations that won't fit these parameters, and perhaps we'll see loosened guidance going forward for certain industries. Restaurants come to mind, but above all else, we just want to make sure that you document all this, have it in writing. You really want to put this in your file and just keep it. And when Josh goes through this calendar, you'll see just how long of a time span passes potentially between when you first received your loan and when this will kind of be almost all over, if you will. So moving on to the next slide, you'll see here, well, how do you count FTEs? How do you calculate that? Well, there's really two methods. Essentially, for each employee, divide the average number of hours paid, I should say accumulate the average number of hours paid per week and divide it by 40, and then round to the nearest tenth, but you're going to want to cap that at 1.0. You can't go over that. For instance, if somebody works 50 hours, they're not going to be in excess of 1.0. There's also a simplified method where it's 1.0 for employees who worked at least 40 hours a week, and then 0.5 for all other employees. So you're going to want to take a look at this and really get to the lowest number possible so you can avoid any negative forgiveness implications. And this question has arisen a lot, and it's still an area of confusion and an area that needs perhaps some guidance. But how do the FTE headcount reduction and the 25% salary reduction interact? We were wondering, would you get kind of double penalized in situations where both of these could have occurred? But the interim final rule that was issued last month put that to rest. It said that the 25% reduction in salary only applies in situations that are not attributable to FTE headcount reductions. And this example is actually right from the interim final rule, where it talks about basically saying an hourly wage employee had been working 40 hours, but the borrower reduced the hours per week to 20, but no change in the employee's hourly wage during the covered period. And because the hourly wage did not change, the reduction is entirely attributable to the headcount, and the borrower is not required to conduct a salary wage reduction for that employee. So in this instance, because the hourly wage remained the same despite the fact that this person's hours were reduced, they don't have to conduct that. Now you see here, okay, they had a reduction in hours. That means they're automatically going to be subject to a forgiveness reduction as well. Well, that's not the case necessarily, provided they meet some of those other limitations that we had just discussed on earlier slides. So with that, I'm now going to turn it over to Josh, where he's going to go over the calendar that I had previously referenced. Josh?
Hey, thanks, Steve. So the question is, how long is this process really going to last? So we wanted to show everybody, because there's a lot of different dates, weeks, months, years in some cases. So we wanted to lay out for everybody just, kind of what a typical timeline would look like under an 8-week period, 8-week covered period scenario and a 24-week covered period scenario. So assuming, again, we use the date of 5/1/20 is the date that we received our loan. So for an 8-week covered period, our 8 weeks would end on June 25th. From there, we would have 10 months from the end of the covered period to submit our forgiveness application. So that would bring us to April 25th, and we'll go over some of the notes at the bottom in a second. The bank from there has 60 days to review. The SBA then has 90 days to review from that date. And then from there, to the extent that the money is not forgiven, we would either have a term loan period of 2 years or 5 years. So just to reiterate, and we talked about it last time, so loans initiated after June 5th, 2020 have an automatic 5-year amortization period. However, loans initiated before still technically have a 2-year term loan period unless you go to your bank and negotiate a longer period. So just keep that in mind. And then layer on top of that, remember we talked about in earlier webinars that you're required to hold this information for 6 years. We're potentially looking at a timeline of May 1st, 2020 as the date the loan was received to August 22nd, 2032, which is the day we'll put on our calendars to, be able to finally discard all of that documentation related to the loan. So possibly, a 12-year, maximum period here. And then for comparative purposes, for for a 24-week covered period, assuming we receive the money on May 1st, our 24-week period would end October 16th. We would have 10 months from that date to submit our forgiveness application. So that would bring us to August 16th, right? The bank has 60 days from there, the SBA 90 days, and then the loan due date and document retention. So it's looking like a really long time, as you could imagine. So hang tight. I can't say that we'll still be doing webinars on these in 2032 and 2033. But any questions up until that time, you know where to find us. And just another footnote too on the forgiveness application. If the forgiveness application is not submitted by the due dates referenced above, so it has to be submitted within 10 months of the covered from the end of the covered period. If it's not, then the principal and interest payments begin immediately. So, like I said, just wanted everybody to visualize the runway for this. Okay, so continuing on our ever-existing trend of open questions and what's still unclear and needs further guidance, we continue to answer questions and refine this list. So just want to go through these again. So we still are unsure, how does the paid and incurred standard impact retirement benefit forgiveness? We still have a lot of questions from clients and prospects looking to make those 2019 profit shares. Will that be or will that not be included? Are corporate shareholders who are also employees allowed to include non-cash benefits in forgiveness requests where partners and other self-employed individuals are expressly forbidden? So Todd had brought this up previously as to what's included or not included. It looks right now the best spot to be is a shareholder of a C corporation. There you seem to be entitled to all your benefits, but we'll see if there's more information that comes out with respect to that. We still are anxiously awaiting. We hear anywhere from 25 to 30 additional FAQs to help kind of clarify all this. We still don't know if the expenses incurred, the payroll and non-payroll, which were used to apply for forgiveness, whether or not they will be deductible for tax purposes. Currently, as it stands, they are not. So as you can imagine, tax planning for the 2020 year could be interesting. We still don't know to this point how the state taxing jurisdictions will treat the forgiven funds. We don't know if there will be additional costs which we can use that will be eligible for forgiveness. And again, this is focused on the non-payroll costs. We still don't know what the definition of a transportation utility is. We do not know, and it at this point does not look like there will be a separate application for seasonal employers. When can borrowers apply for forgiveness? So based on the application that Todd showed before, kind of makes an inference that maybe you can apply in an earlier period before the 24 weeks up, or even before December 31st. I think you're going to have to continue to evaluate your position from a spend and also from an FTE count, and then make your decision. How does the December 31st, 2020 rehire date impact borrowers who want to apply for forgiveness prior to the date? That kind of goes along the same lines as the question I just asked. I think, as more information continues to come out, we laid the calendar out in the previous slide. So, if you're unsure, you wait. But if you're ready to move forward and you're confident with your calculations, then you move forward. When will new guidance be released by the SBA and/or the Treasury? We were hoping for it this week. We got just a little taste. Hopefully next week or so. Next question is an interesting question. Are owners of multiple entities allowed to claim compensation for each entity? If you remember back to the slide before when Todd was talking about eligible owner compensation and the cap, the way you read it now seems to make you think that it can be claimed only once. However, in many situations, you have multiple loans, right? You have some banks that allow you to apply under one consolidated application with all the affiliates. and with some banks you applied individually for each entity. So will be interesting to see, how much more clarification comes out with respect to that. And then how many more times will this application change prior to being submitted? We know the expiration date on the current one is October 31st, 2020, but let's see how many more revisions come before that. And with that, we're going to go to our final polling question. I guess, Todd, this is your thing, huh? So let me turn it back to you real quick.
Okay, thank you so much. So, by the way, again, just going to repeat that the presentation will be sent to you if you're registered, so you will have this information available. The polling question is, where do I send the CPE participant evaluation form after I complete it to obtain my credit? 1 is email it to the email address at the bottom of the form. 2, email it to my SACS advisor. And 3, no idea. So which is it? Is it email it to the email address at the bottom of the form, SACS advisor, or no idea? Polling is open. Again, this is for the CPE. If you want CPE, start voting. And I know we're collecting responses. This should be a pretty easy one because we've had it a few times. I think you can figure out why we are putting the same polling questions on over and over again. If not, feel free to email us as to why do you keep using those polling questions. And it looks like we're almost to the complete portion, so we can probably show the results. Okay, I'm very proud of you. 97% of you got the answer right. Email it to the email address at the bottom of the form. Okay, great. Okay, moving back to you, Josh, for the open discussion part of our program.
Hey, thanks, Todd. So again, just always like to talk about what's on everyone's mind. A lot of this comes from the questions that everybody submits, so please continue to do so. It's very helpful. So kind of what's on my mind, what's on the mind of the team, what's on your mind. So there's still $129 billion left in the PPP program. So that's 12 days left for those of you who have not applied to get your application in and approved. By June 30th, you must have an SBA E-Tran number. If your bank is no longer accepting applications, there are other avenues. You can feel free to reach out and we can help kind of guide you along. Also note that if you have already received a PPP loan, you cannot submit a second application for more money. That would be nice, but something that is not going to happen. And Steve kind of mentioned it before. The message seems to be that from the Treasury Department, Capitol Hill, Congress, they all want forgiveness to happen. For all these businesses, so they continue to loosen the reins. Especially we see it in the FTE counts, and as more time goes on, hopefully we'll get some more guidance supporting that. We talked briefly before about the fact that the application seems to indicate that you will not have to wait until December 31st, assuming assuming you have no issues with FTEs. There's also indication out there that tools will become available to help with forgiveness applications. So, stay tuned and keep an eye out for that. I know everybody's trying to track it on Excel and do their own calculations, and not every calculator is the same. So we'll see what comes out with respect to that. We've gotten a lot of questions from clients regarding financial statement presentation of loans, and I'll let you know that the AICPA is still working through technical guidance on how to account for the loans from an accounting standpoint, as in some cases they will cross fiscal years, right? They have a lot of clients June 30th fiscal years or calendar years, and again that goes back to our previous discussion with respect to the calendar. and the potential runway for this. Also, too, just want to reiterate that the NJEDA did put out small business grants, and they are accepting applications. So if you are in need of additional funding and you meet the criteria, definitely check that out. I've also seen some emails from some local counties putting money out there as well for their small businesses. So, if you're in need, certainly explore, every opportunity as possible, as much as possible. And finally, starting to get word from some banks that they're getting online with being Main Street lenders. I will note that not every bank who participated in the PPP program is going to participate in the Main Street program. So if it's something you're interested in, start reaching out to your banks, see if they're participating. If not, see if they can make a recommendation for you. And with that, that's all the open discussion items we have. We'll see you next Thursday, June 25th. I can't believe it's June 25th. I look back, our first presentation we did together was April 1st. So we're almost going 3 months strong with our weekly recovery update. Again, for additional questions, email COVID-19 at sacsllp.com. And of course, every webinar, every e-blast, other good sources of information on the loan programs and grants can be found in our COVID-19 Resource Center at sacsllp.com. And of course, if you're not receiving the invites on a weekly basis, make sure you go to the website and register for those. And with that, I'll say be safe. Hopefully we continue to get some more information this week and next week, and we look forward to seeing everybody next Thursday. Take care.